Hi everyone. Sorry. Welcome to today's webinar. Okay, just going to set up the screen. Just give me a second. All right, please drop in your questions, right? At any point in time, I've got my question and chat window up. So please do type in and send in any questions or comments that you may have. Hope everyone can hear me loud and clear. All right. Everyone, hi. Okay, right. Please let me know if you're able to see my screen. Just trying to set it up. I believe. Hang on. Screen two. Hi everyone. Okay, guys. Oh. Hi everyone. Okay, I just typed the message. Are you able to see my message, and are you able to hear me and see the screen as well? I'm just trying to set everything up here. Screen sharing. Okay. Yes, we started the webinar. Right. Okay. Sorry, guys. Okay. Are you able to view the screen now? Okay. I see Damir and Samuel have joined today's webinar. I see a couple more people coming in as well. Right. Just before I start, I just would like to know, can everyone see my screen clearly? Oh no, it does. Wait, hang on. Yeah. Somehow. Wait, just let me. My apologies for this. Let's just give me a second while I sort out the screen and the camera. Yeah. I believe you guys can see the screen sharing, but it's blurred. Am I correct? All right, sorry. Just let me quickly sort this out. Maybe. All right, sorry guys. Okay. Okay, I believe you can see my screen clearly now, right? I believe so. This should be uh right. And I need to share. Which screen am I sharing? Screen two. Why is it not coming to screen two? Hang on, sorry. Screen one. I don't want to share. Okay, screen two, share. Right. Okay. Sorry. Right. Okay, everyone. Sorry. Just can I get a quick okay, there's few of you signed in. Right. Are you guys able to type questions, please? Could you just type anything in the chat, in the webinar chat, or in the question or in the question box as well? Question there's a Q&A box as well. Are you guys able to interact with those icons, the webinar chat and the question chat, just to make sure everyone's on the same page and you can actually see my screen as well? Okay. Yeah, I believe so. You can see my screen. Okay. So sorry for the slight delay. Okay. So today's webinar series by IronFX is about trading strategy clinic. Okay. Just a quick disclaimer before we kick things off. Or sorry, just give me a second. Yeah. Okay. So okay, just a quick risk warning that okay, the products available on IronFX are traded on margin and carry a high level of risk, and it's possible to lose all your capital as well. So basically, any instruments that you see carry leverage on the platform here by IronFX, and also all the information that will be presented in this webinar should not be considered as investment advice or recommendation. Just it is purely for educational purposes. All right. Okay. So here we go. Right. Okay. So I'm your host for today. My name is Ketan Ramachandra. I'm from Everest Fortune Group, where I'm investment analyst. So this webinar is brought to you in a special partnership together with Iron FX and Everest Fortune Group, where we have been the finalists for the best FX and equity research from 2019 to 2021. Okay. So here's just a general agenda. It's an open agenda basically, but I'm just we'll start things off with going through by some of the key economic data that has come out that were released yesterday, and something that's coming up very soon as well in about 45 minutes, which is the bank rate decision by the Bank of England. And we also had big CPI event from the US yesterday. Then we'll touch a bit on gold and DXY as well, and any other topics that you guys may have, right? Okay. So, oops, okay, we don't need to go. Thank you. So now we'll switch to uh, our browser. Right. Okay. So this is all right. The page for Forex Factory. I believe most of you should be familiar with this website. Basically, it is a website that has provides us with lots of information, but we, or well, at least I primarily use it for the economic calendar, right? So we're on the economic calendar page here, and you're able to filter through various periods in time. So I'm just going to filter to 8 to 12th of May. My setting is on GMT time, right? So 10:13 a.m. GMT. And then you can filter the economic events as well. So generally, I will select all the currency pairs that you see here, event types, all the event types, and I'll select the two most high impact events, and will apply the filter. So this will give us the list of key economic data for this week. So as you can see, yesterday on Wednesday, 10th of May, we had the CPI data released at 12:30 p.m. GMT, where we saw uh, readings for the headline CPI and core CPI come in mostly in line with the estimates on a monthly basis and on an annualized basis, right? So this means that the overall inflation figures were kind of soft, and that is why we saw equity markets rally pretty strongly overnight, especially the tech sector. Nasdaq composite rose more than 1%. We also saw the dollar index fall initially, and we saw the price of gold rise as well. Right. Okay. Guys, this is um is an open session, right? So please interact via the question and answer box or interact via the webinar chats as well, right? So please do uh, send in your questions and comments, because whatever you guys want to look at, we'll be looking at it together, right? So whatever you guys want, so please do drop your questions and comments. Okay. If not, then we'll just continue with the session. Okay, so we had CPI data release yesterday. So let's just look at the at an annualized basis. So if you click on the graph icon, you can see inflation dropping. This is the headline CPI falling on an annualized basis, while it has fallen pretty sharply over the last now I would say almost 10 months. This was probably one of the slowest decline rates of decline in recent months. So this maybe is a bit of concern that inflation at a headline level and core level is not falling as quickly as uh, the Federal Reserve would like. So maybe this is why we saw um, the initial reaction in okay, so the initial reaction in the price of the US dollar, it was sold off um, pretty aggressively. So now this is my chart. This is a chart for the DXY. All right, this is the dollar index, and I'm on a 30-minute time frame. So as you can see, the data was, and my time is also set as GMT. My chart timing is on GMT as well. So as you can see at 12:30 p.m. GMT, that's when CPI data was released. And also, it was when we had a big sell-off in the dollar. So you saw dollar index. Let's just zoom in maybe a little bit, right? Close at one close at about 101.80 just before the news dropped. And once it dropped, it fell from 101.80 or 101.90 all to as low as 101.20, right? And a big drop in the value of the dollar index as the softer, as markets had presumed or interpreted the CPI data as being kind of soft, so meaning not as the figures were actually gradually getting lower. So this meant that the Federal Reserve need not be as aggressive moving forward, right? So they may not be cutting rates anytime soon, but at least initially the markets digested this information as being positive uh, to the fact that the Federal Reserve won't be raising interest rates aggressively, which is why the dollar was sold off at this point in time. But however, as the US trading session progressed, we had some retracement in price on the value of the dollar index, retracing almost or recovering half of the loss, more than half of the losses that were initially experienced, and then it headed lower down again. But as today's Asian trading session kicked off, followed by the European trading session, we saw a big demand for dollars, right? So this is the dollar index. So now if I were to look at the euro, right, do take note that the dollar index is a basket of currencies that is used to give a relative value for the US dollar, right? So this basket consists of various currencies such as the euro, Japanese yen, Swiss francs, British pound, and I believe Swedish krona, right? But the euro makes up 57% of this basket, while the Japanese yen makes up 13%. So together, the euro and the yen make up almost 70% of this basket or this index. So if you see the euro and the yen being bought aggressively, then it's very certain for sure that you will see the value of the dollar index fall. But if you see uh, the euro being sold off aggressively, the yen being sold off aggressively, that means dollar is being bought then you naturally you will see the dollar index rising. So so we'll take an example. So 12:30 p.m. GMT, 10th of May, we had a big drop in the value of the dollar index. So if we look at the euro, same times, 12:30 p.m. GMT, you saw the euro rise almost, what is it, 60 pips from 0945 to as high as, yeah, so almost 60 pips. Yep. So euro USD jumped 60 pips, while dollar yen fell from 135.30 to yeah, so almost just over 100 pips. Yeah. So you saw big moves in currency markets when the data was released, right? So the CPI data was printed mostly in line with estimates. So that is why we saw the currency pairs for the euro and the dollar yen react as such. And similarly, now we see at 6:30 a.m. GMT, we saw a big bid in for dollars, which caused the dollar index to rise. And do remember, the dollar index is somewhat lagging because the underlying currencies have to move first. That means Euro USD needs to be sold off because people are selling dollars, euros, and buying the dollar. And similarly, dollar yen is bid up strongly. So we are selling yen and buying US dollars. So when you see dollar yen and the euro uh, gaining in favor of the US dollar, that means the dollar index will naturally rise up uh, sharply as well. So this is the price action that we are seeing, right? So uh, let's just look at a top view for the dollar index or for the euro. Okay, let's just look at the euro. Because since the euro makes up 57% of the dollar index, by looking at the euro itself, we are able to understand how the dollar is how the dollar index reacts as well. Okay, so now I've switched to a daily chart on for the euro, right? This is euro USD. So when you see euro USD rising, as it did from mid-March to just the start of May, that means the dollar is being sold off and euro is in demand. So similarly, if you look at the dollar index, this is the same period where we saw the dollar index retreat, uh, pull back significantly as would be expected. Okay. Question. Oh, wait, are you allowed to chat? No. Sorry, just trying to see. All right, sorry, just checking if the webinar chat windows are working. Yeah, like I said, guys, please do interact because your feedback and your comments is much appreciated. So we can discuss any currency pairs that you would like to evaluate. Not only currency pairs, we can also look at US indices as well, like the US 500, DJ30 or NASDAQ. And we can also look at a German DAX. And if you have any commodity questions as well, we can look at gold or oil as well. Okay, but let's just go back to the euro. Okay. Yes. Okay. So like I said, okay, so this is the euros. Let's just zoom in a little bit. So we've run a Fibonacci retracement here from the bottom left of mid-March all the way to the peak that we had in the end of April. By running a Fibonacci retracement and applying all the levels, we are able to identify potential support and resistance levels depending on the leg of the move. So since this is a rising leg, this we will be looking once you have identified bottom the bottom point and you identify the peak, you're able to draw the Fibonacci retracement levels, and then identify potential support. And conversely, if you were to look on a downward leg, you would take the peak top left and go here. For example, the first leg move down would be here. This was when you would notice it, and then you pull all the fibs up, and then you're able to identify potential resistance levels. All right, so that's how we run Fibonacci, or that's how we use the Fibonacci retracement indicator. Okay, so not only do we use Fibonacci, we also like to use uh, horizontal support and resistance levels where price action has respected that particular level uh, over multiple periods in time. So what do I mean by that? So for example, if we zoom in just a little bit, so in recent times, as you can see, this level at 110.50 or around there, 110.50 to 110.60 has acted as a pretty significant area of resistance. Okay, I'm just going to clear some of this current labels here so as not to confuse anyone, including myself. Yeah. Right, so let's start with a clean chart with just the Fibonacci retracement indicator on the chart. So one of the first few points that you can identify is, okay, so previously this was the previous high back in February, and then price started pulling back aggressively. So you would have identified this as a potential. Let's just take the body of the candle rather than the wicks. So would have identified this as a potential resistance level because price reacted of this and started to pull back pretty aggressively. And if you just zoom out a little bit, so as you can see here as well, what was previously like a resistance level from mid-December to mid-Jan later served as a support level, which finally got broken in February. So by looking at a daily chart and zooming out, we are able to identify various support, resistance and support levels over time. So when we are able to identify these support and resistance levels and then line them up with other indicators such as the Fibonacci retracement, we are identifying significant levels of support and resistance. This is where you will see the candles reacting off this support and resistance level. So we will see price action really reacting to these particular supports and resistance. Okay, so right. Okay, so if we just look here back in December to early Jan, we would have also identified this as a potential resistance as well, right? In the past. So you would have seen here, price peaked in 15 December, pulled back, consolidated. You would have identified this as a potential resistance. And then price came back up here, hit it, and started reversing down again. And previously, what was a support, right? This would have been a potential support area. And this support area, so you could say price was ranging between 1.0580 and 1.0690, right? Price was ranging here. And then finally it broke through this support, although the move was not uh, sustained. It sort of consolidated between 1.0580 and 1.0520 before price rebounded and broke through the resistance. And then it made a new high, and then after that it fell down to what was previously a resistance, then became a support. It consolidated around the support, bounced off this level a few times before finally breaking through and consolidating again. Okay, so this is how we can use uh, previous highs and lows, and I try and line them up with the current uh, levels for the candles here, for the resistance and support, and also to see if not only do they line up in price action, but also line up with the Fibonacci retracement levels as well. Sorry. Sorry, apologies for that. Just all right, okay. Yes. So let's just clear up some of these lines and try and establish new resistance and support levels based on recent price action and on the recent Fibonacci retracement levels as well. Okay. So we've zoomed out over a period of, I would say, about the 12, about 15 months. Okay. So just trying to see if we can line up any major potential resistance and support levels. Okay. So if when you zoom out a little bit more, you're able to identify various levels that may seem significant. So for example, around here, you could see this served as a important support level, which finally was broken, and then it acted as a resistance level. And it looks like it will continue to be a pretty significant level for the present time, right? For the present moment in time. So let's just switch this to red. So you can see by zooming out on a daily chart, you're able to identify potential uh, levels that may act that acted as significant resistance or support levels in the past that may actually have relevance in the present time. So, like I said, what was previously a strong support here uh, became a resistance over time in early March, and now finally it is still acting as a resistance because you can see price came very close to this level before retracing and pulling back. Okay, so let's see what else can we identify here. Okay, so if you also look at the 23.6% Fibonacci retracement level, you can see that after price made the peak at 110.95, it started pulling back and it found support at the 23.6% resistance level as retracement level as well. So let's just pull the horizontal line here and see if we can line up with anything in the past. No, not really. The only thing that it really sort of lines up is over here where it acted as a support level, but I don't think this looks like a, okay, let's just put it here for now. And this was acting as a support level for the euro, right? So if we zoom in now a little bit, so you can see price rejected, made a peak here, uh, got got rejected at this major resistance, started pulling back, came down to exactly the 23.6% Fibonacci retracement level, reacted of it, consolidated, and bounced higher again. So you could say it was ranging for a few days between what is 109.55 and 111.03 for a period of almost 2 weeks, right? So when you're able to identify ranges as well, then you can see that price is reacting off these ranges. You can realize that, okay, this is not a bullish trend, this is not a bearish trend. Actually, in fact, price is just moving sideways, or it is just range bounding, right? So this is how you can identify trends in price action for certain currency pairs or commodities. And once you are able to identify the trend, you can uh, set up your trading strategy accordingly. So of course, this is on a daily chart, and then you can zoom in onto the 4 hour or 1 hour chart and uh, execute your strategy accordingly. So you can see this is a clear move we had from mid-March to the end of April, basically. So we saw a nice bullish trend. So this is when you would be looking to identify potential support levels, uh, so that you would be looking for pullbacks, and then looking to go long for the euro uh, as well, right? For the euro dollar, yeah. Because also this is the same time where a lot of economic data was coming in. There was a lot of rate cuts being anticipated by markets. So this is where the US dollar was being sold off again. And so keep an eye on the US 10-year bond yield, bond yield too. So bond yields will also give us a good indication onto what the dollar will be doing, right? So if you see US bond yields rising aggressively, particularly the 10-year bond yield, you can expect that the dollar to be bid up as well. And conversely, when you see bond yields falling, the US dollar is also dropping in value versus its peers. Okay, so this is how you can identify a potential support level, which was tested several times. And you have identified a very long-term resistance level that lines up very close to the current resistance that was just determined or established recently. Okay, so let's just see. We got these levels here, and now today, particularly, this support level has been broken clean through, and it looks like this candle will indeed close below this support level. Now, this support level is going to act as a resistance, right? In the future, in the next couple of days, this will be a key significant level as a resistance, or it'll be a very strong resistance barrier. And then if we look at the next support level in terms of Fibonacci retracement, it will be coming in about 38.2%. But let's just zoom in on the 4 hour chart and see if we can identify anything in particular, uh, apart from, in addition to the Fibonacci retracement. Okay, so when you zoom in on a 4 hour chart, you can see that price acted this level here at 1.0960 acted as a resistance back in 23rd of April. That resistance was broken, and it was very choppy trading going price action going on here, but basically price was consolidating around this level. So you could say it well, it acted as it broke through the support, then acted then price was just trading around it here before it found direction again and moved up. So you can see that this level has acted as a resistance and support over here, and acted again as a support in on 25th April. Sorry, this was between 18 and 21st April, where it acted as support and resistance. Then on 25th April, acted as a support back, and then again on 28th April as another point of support, and then between 1st May and 2nd May as well, it acted as support again. And similarly, very close to the start of this week, when the US dollar gained significant strength versus its peers. It started the week on a very strong note. You saw the euro pulling back strongly and again finding support at this level again. So this level is definitely a very important support level that not only lines up with the 23.6% Fibonacci retracement, but if you zoom out, it also lines up with what was previously generally a pretty strong support here as well. So this is how you can use various indicators to try and identify support and resistance levels. And now, as you can see on this is a 4 hour chart. Price has cleanly broken through this support, and now this will act as resistance level. Okay. So we can see the Fibonacci uh, retracement level on this big leg up here at 38.2%, which is at about 1.0870. And if you zoom out, does it act as any, do you see any, let's just see if it lines up with any price action in the past around this level. So no, we don't really see any clear level of price action that lines up with the 38.2%. But since there's nothing that lines up cleanly, so we can just take this as a reference and see that this could be the next potential support level here for the euro. Okay, over here. Okay, if you look, if we ignore the Fibonacci retracement levels and just look at price action, so you can see around here 1.0920 that price. This level served as a resistance here back in 23rd of March, served as resistance again on 30th of March. It got broken through this level to the upside and to the down. And you can see between 7th April and 12th April as well, it served as a resistance level. And then it broke through, price broke through and retraced, came back, bounced off this level again. So you can see this is a pretty significant level as a resistance and support. All right. So we have identified another key level using just price action, right? To see where price has reacted off as a support or resistance. So sometimes obviously the level is the strongest when it lines up together with price action and the Fibonacci retracement level as well. So although this level does not line up with any Fibonacci retracement, but it is still a pretty significant level, as we can see that price has clearly reacted off this level several times, be it as a resistance or support. So this would definitely be the next key support level. So this support level is 1.0912, and we can expect price this downward move to get exhausted around this level. So we may see a lot of profit taking coming in here. So whereby people who may have been short the euro from about 110.50 and 1.10 may be looking to exit their positions or partial of some partial of their position at 1.0910. And then the next retrace support level will be at the retracement, Fibonacci retracement at 38.2. Okay, so we can also highlight this zone. Highlight this zone, right? As a okay, wait, hang on. As a major support zone. And so I'm just going to get rid of this top line here and then just have this zone followed by the Fibonacci retracement at 38.2%. Okay, so do take note that although the US dollar is currently in very strong demand, but we may see, at least from the perspective of the euro dollar, that price action could get exhausted around 1.0910. So this is where we can expect at least the first area or region of support to come in for the euro, and we may see the short positions being closed out. So when short positions are closed out, traders are selling the US dollar and buying back the euro, which would cause it to consolidate and stabilize around this region. And if the short covering is really aggressive, then you could see the euro bounce back up again. Okay, sorry. Okay, so this is for the euro. And if you look for the dollar yen as well, the dollar yen has, okay, dollar yen has been very choppy, but not as clear if you compare in terms of the 4-hour chart for the dollar yen and euro. Actually, both of these instruments have been trading in pretty choppy ranges recently. So there's no real clear moves like we saw earlier this month, right? You can see a very clear bullish trend here from mid-March to towards the end of March, right? When you're able to see or identify clear uh, bullish and bearish trends, that's when uh, trading is somewhat easier because you are able to view the trends and it's a clean move, right? Basically, you're trying to look for as clean as possible moves to the upside and to the downside. So when you're able to see that on like daily charts and 4-hour charts, then you're able to apply your technical analysis to your preferred time frame, be it the H4 chart or the hourly chart, and then you can structure your trades accordingly. Okay. Um, Next, okay, let's just quickly look at gold because gold had strong reaction as well as softer data coming in from the US, for example, in terms of inflation, would mean that similarly the Fed is not going to be aggressive moving forward. So that's negative for bond yields, or in the level of the bond yields is negative for uh, the price of the US dollar. So when these two things go down, when bond yields drop and the US dollar drop, the value of the US dollar drops, this generally serves as a tailwind for the price of gold, which is what we saw yesterday, but the move wasn't sustained. What is also important to note that if you look on the monthly chart for the price of gold, you can see since August 2020, the level of 2070 was a major resistance level, right? Which was tested back in March of last year. See, prices spiked very close to it. It did not breach this resistance level, started pulling back. And now, in the last 2 months, right, in May and April, the level of 2050 was tested again. So you can clearly see that these are major resistance levels. So let's just clean up the chart a bit by removing all these other support levels. So if we take the top of the wick, you can see this is a very uh, key resistance level, which was tested only almost a year, almost a year, 18 months later. It price pulled back significantly before being tested again. So so what we're trying to identify here are really significant levels of resistance and support. Now, this one is clearly a very key resistance level. So if we just zoom out into the weekly chart, and let's just take the top of the candle here in August 2020 and set that as another resistance level. So you can see we have another zone here, right? Okay, so I'm going to remove this and put in my zone. Not this, sorry. Sorry. Okay, so you can see this zone here between 2030 and 2075 has been an area of significant resistance. So whenever price of gold has come into this region, it has been actually, the gold has actually started to sell off very aggressively. So there's intense selling pressure coming within the price range of 2030 and 2075, which is what we've seen recently as well. We saw it in April and on third, and just going to the daily charts, it's easier, right? We saw it in 20th of March. Oh, no, sorry, not 20th. We saw it in 13th of April, right? 13th, 17th April. It went into the zone, but price was rejected here. There's intense selling pressure. And similarly, on 4th of May as well, it came very close to touching the August 2020 high of 2075, but it started pulling back. And then again, yesterday, it entered the zone again where it ran into intense selling pressure. So this should be a very important region to take note of, especially if you're looking to go long gold again when it comes back to its various support levels here and it rises up into these regions. You should be automatically be knowing that 2035 to 2050 or 2070 is an area where I'll be looking to exit my uh, long gold positions. Okay. Next, we'll just quickly end up with looking at the dollar at cable, right? Sterling pound and US dollar. Why? Because in less than 10 minutes, we have a monetary policy announcement by the Bank of England, who are going to raise interest rates by 25 basis points. So currently the bank rate is at 4.25%. You're going to bring it up. They're very likely to bring it up to 4.5%. Right. The market consensus is that they will raise rates, and it seems like that's what they will do. So you can see the Bank of England has raised interest rates pretty aggressively as well. Let's just delete some of these. Okay. But today's strength in the dollar has seen cable being rejected at about 1.2670, and it's been pulling back since yesterday evening. Oh, sorry, not yesterday evening, but since yesterday. Right. So if the Bank of England does indeed raise interest rates to 4.5%, then this might stem the decline in the cable. But if they surprise the markets and raise 50 basis points, right, this would be a shock to investors and traders, and we may see a significant reversal in sterling pound, right? But that's only if they do surprise markets and raise 50 basis points, which I don't think there's any reason to do so. But maybe, but then again, that's why it's called a surprise move. But let's just assume if they do raise interest rates by 25 basis points, which is in line with consensus, then I think this might stem some of the move in the cable. So let's just do a quick Fibonacci retracement on this current leg of the move to establish various support levels. Okay, so this is a daily chart. We're looking at the recent significant move up. So as you can see, the first support comes in at 23%, 23.6%, which also lines up pretty nicely here back in May of 2022. So this is why you look at a slightly longer time frame to identify significant support levels. So here you can see not only does did this level act as support back in May of 2022, it acted as resistance in mid-December, and again as resistance from 20th or 18 Jan all the way till early Feb. So it has acted as a support in the past, resistance, and then resistance again before finally breaking out. And now this is a key support level that lines up with the 33.6% Fibonacci retracement as well. So even if the Bank of England raises interest rates, but it doesn't stem the decline, then we could see the cable exhausting around 1.2480. This is where we can expect to see a lot of buying pressure coming in for the cable, as the short traders would be looking to exit their positions around here. All right, so if you zoom in on the 4-hour chart, you can see that the price acted as a support here, resistance here. So we zoom in a little bit. Although it didn't actually touch the level, but it came pretty close to it, which should signal to you that this is a region of area of resistance in the past. And then now it has broken through it several times to the upside and downside, and now this is acting as a significant support level. Okay. And then another thing to note is you can also, once you zoom in on the 4-hourly chart, you can look at the price action candles to identify other, I guess, intermediate support levels as well. So if you were to look with your crosshairs, you can see probably this around this level here, right? Around this level here would be another support region as well. Okay. So in the past, this level of 1.2550 acted as resistance back in mid-April. It broke through the resistance, but there was no sustained moves and it retreated back down. And then from here as well, it broke through the resistance, acted as support. And now this level of 1.2550 would be the next intermediate support. So if cable breaks through this level here, then it's very likely it's going to go down all the way to the 23.6% retracement level. Okay. All right. So um, do take note of that, of the levels of the immediate support levels for the cable, and also do take note that we have the Bank of England dropping their monetary policy announcement in less than 5 minutes. All right. If there are no further questions, I will just end the seminar, but the webinar, before I do that, I'm just going to launch a quick poll, and I hope you guys will be kind enough to give your feedback, provide your feedback as well, because it's very valuable to us, and it also helps us to deliver better content and topics for you. All right. Okay. Thank you, everyone. All right. See a few names: Damir, Dipesh, Samuel. Thank you, everyone, for tuning in. Hope this has been a fruitful session for you. And yeah, do stay tuned to uh to the to any marketing information that IronFX will be distributing to you guys. So then you'll be aware and alert for any upcoming webinars that will be brought to you guys. All right. Okay then. Okay. If there's no further questions, then all right. I'll be ending the webinar today. All right. Take care, everyone, and have a good end to the trading week.